This is John Prasinos, editor-in-chief of Aircraft Value News and a contributing editor at Avionics International Report. With me today is, well, one of the most influential aerospace and defense consultants in the world. CEOs and other big players in aerospace pay this guy a lot of money for his insights and his advice, and we are lucky to have him here today. I'd like you to welcome the James Bond of aerospace consulting, Richard Aboulafia, Managing Director at Aerodynamic Advisory, an aerospace and defense management consultancy headquartered in Ann Arbor, Michigan. I'm also happy to say that Richard's been my friend for more than 25 years. Richard, thanks for agreeing to speak with me today.
It's always a pleasure, John. Thanks so much for hosting me, and thanks for the exceedingly generous introduction there.
You bet. You deserve it. All right, let's get right to it. Richard, as the start of 2026 looms on the calendar, which aircraft families do you see as most overvalued or undervalued relative to market fundamentals, and what signals are you watching most closely?
Well, it's all relative. And of course, there's the supply and demand side. On the wide body front, it's Boeing's crushing it. 777X, very strong demand. Obviously 7 years of delays and possibly more to come. They just wrote off $4 billion, $4.9 billion, I think, for the latest problems. But everyone wants it, so there are worse problems to have. The order book is rounding 600. That's extraordinary for a jet that costs a couple $100 million a pop. And now Emirates last week said that they're looking, or they would like to start looking at a stretch version of the Dash 10, also extraordinary. So it would go from the biggest airplane on the market to an even biggest airplane on the market. Meanwhile, the 787 is having its best year since it was launched in 2004, as I recall. So terrific numbers. That too is a question of the supply side. Can they get production to where it needs to be? And they're making strides, but it's a long road back. And as you know, aircraft values, you more than anybody else know, it's a function of both supply and demand. And until they get supply where demand is, aircraft look pretty good right now, especially 777 and 787. On the narrow body front, the biggest question in the aircraft ramp world is the 321. Everyone wants that. The backlog is way over 5,000 jets, and that's key to everybody's plan for point-to-point routes, especially across the North Atlantic and certainly intra-Asia and even Middle East, Europe now, as we saw last week with the Fly Dubai order for the type. So that's just a question of how quickly they can build it. Those are the real stars of the aircraft market and the valuation market, I think. Undervalued? Yeah, it's tough to say anyone's undervalued in a market where people are trying to get capacity wherever they can. For example, Etihad ordered some more A330neos, re-engined wide body from way back, but people want it now because it's the only thing you can get. A little bit undervalued, nevertheless, with production only in the 3 per month range. Similarly, A220, that 120 seat market has always been in no man's land in the business. So, there's a lot of concerns about profitability and production rates. And by contrast to the 75 per month they're heading to on the bigger narrow bodies at Airbus, these things are stuck in the, let's try to get to 10 per month sort of range. It undervalued across the board, but part of that is structural to the market. Yeah, I think sort of one of the more interesting parts of the whole thing is the A350-1000.
Right.
Because people want a plane in that class. People have ordered a significant number, but it's getting beaten by the 777X. And there's a lot of concerns about whether the motor is up to the task of flying, especially in the Middle East. Hot considerations and whatever else, as well as whether or not the engine can grow to make the A350 grow if they do a Dash 2000 version to go head-to-head with the 777-9 and even 777-10. A lot of uncertainty. So as a consequence, in relative terms, the asset's kind of undervalued.
Well, it seems that Boeing is bouncing back from its severe woes, but Airbus and Boeing are still struggling with production stability. These crazy tit-for-tat tariffs are hurting supply chains. They're causing a lot of geopolitical uncertainty. Both Airbus and Boeing are having trouble meeting demand. How are these production shortfalls, these production snafus, how are they rippling down toward lease rates and values for both wide bodies and narrow bodies?
Yeah, I mean, it's a good thing to have jets right now, isn't it? I mean, I haven't. I mean, it's been a couple decades of my colleagues and I decrying the relatively deflationary market for jetliners, and that's no longer true. I mean, these production shortfalls, along with the costs associated of keeping older jets in service longer. United just announced 757s, baby, for as long, a lot longer. All of this is creating an upward momentum for values. Very, very positive. So you may meet with the lessors and financiers in the industry, and they're pretty bullish. They're going long on aircraft, frankly, for all the right reasons, I think, because this looks like a super cycle to me. Obviously,
Right.
a lot can be derailed, war, pandemic, self-induced recession because of deglobalization and tariffs and whatever else. So many risks. But so far, we're doing pretty good. And, as a consequence, values look strong and production rates, frankly, they continue to disappoint a little bit. We'll see what happens in December, but boy, Airbus needs to deliver an awful lot to reach its goal of over 800 deliveries per year. And Boeing, too, needs to show that it can get to that 38 per month and stay there on the max and then on to, 42, 52, 57. It's a long road.
Well, from conflicts to trade tensions, geopolitics keeps reshaping airline network planning. Which regions or airline business models are most likely to shift aircraft demand and values over the next 12 to 18 months?
Yeah, it's pretty clear that the big I don't want to say loser, but yeah, it's low cost carriers, especially in the US, are not doing good.
Right.
And that, we've seen this all in the headlines with Spirit and whatever else. But when structural costs increase, and you're trying to compete on costs, and people are all of a sudden showing a willingness to pay more, that's bad for you. It just is. And what's sort of fascinating is for years we've had declining fares, declining yields, and everyone has sort of taken it as a mantra that, people won't pay more. And you can stimulate the market and get people to fly if you charge less. And now what's happening is fascinating. For the first time in as long as I can remember, I don't know about you, but things are coming up and people are saying, okay, it's not scaring them away. So that's good for the legacy network carriers. Is it good for the low cost, especially the ultra low cost? No, it's really bad.
Yep. Well, with interest rates still elevated, how are you seeing capital costs influence airline and lessor behavior? Has the pendulum swung toward or away from sale leasebacks and new aircraft commitments?
Well, you're correct to highlight the importance of interest rates. I always regard it as a relationship between the cost of capital and the cost of fuel. And when you've
Right.
got a big chasm between the two, forgive the pun, chasm, CASM and CHASM, but when you've got a big divergence there, and you've got fuel that's high and interest rates low, that's a market for minting money for jet makers, right? And
Right.
for lessors too. What we have now is a bit more complicated, of course. Fuel has come down to about 60. I didn't expect it to get, thankfully it's not 20. That's death on the jet market, right?
Right.
But 60 is good. Watch the
Sustainable.
space.
Right.
We'll see. Interest rates still stubbornly high, as you say, relatively high. Probably going to be in the somewhere in the fours for the next year. Um, I tend to think that's still pretty good territory for the lessors. And I'm not anticipating any major shifts in the part of the market that's third-party financed. It just seems like a pretty good way forward. Good, from an airline standpoint, just good to get these things off your balance sheets and do whatever else. That doesn't mean the usual carriers who prefer to use their own money won't be doing it, but I'm just not anticipating any major shifts in that dynamic.
Well, there's ongoing talk about next generation narrow bodies. How should the industry think about the effect of these future programs on the value trajectory of current generation fleets?
Yeah, it's one of my favorite topics, really. First of all, we're waiting for some kind of clarity on next generation propulsion before we can talk about next generation single aisle.
Right.
And of course, you've got this fascinating divergence between Airbus and Boeing. Airbus sure seems to like the idea of open rotor, which of course GE through CFM with Safran is pushing with the RISE program. Boeing's been pretty clear that they prefer ducted. And that, of course, calls you can't have an ecumenical wing. That's becoming very clear too. So whoever goes first, they go down that path, they go down that path. And I don't think anyone's willing to go down that path until we get all the test results from open rotor and whatever else. And GE is moving very aggressively on that front, but not anyone else. Rolls, of course, still recovering from its financial woes. Hopefully, it'll get there with ultrafan technology, but that's going to take some time. Meanwhile, Pratt and Whitney, of course, their priority, frankly, is military, and they're still recovering from the powdered metal issues and other
Right.
production-related challenges from the geared turbofan. I think it's safe to say that if you are an airframer, you would like more than just GE to be aggressive about a next-gen engine.
Right.
All this to say, what's the bottom line? You're not going to see a next generation single aisle other than derivatives of existing generation aircraft. You're not going to see a next generation single aisle enter service till well into the late 2030s, 7, 8, 9, somewhere around there. And even then, I don't think it's going to be that much of a quantum leap to clobber values of existing generation jets.
Wide bodies have staged a comeback, but inconsistently. Which long haul markets or aircraft types are positioned for sustained recovery and which might face another value correction?
Yeah, this is really interesting because, frankly, a lot of people really love aviation and as an industrial policy. So for years now, 20 years, a lot of our career, you've had the Gulf superconnectors grabbing up all the capacity they can, grabbing up all the traffic they can, and now you've got Turkey and Saudi Arabia saying, we'd like to do the same thing. And then you've got India saying, we'd like our traffic back, please. And then you've got other regional carriers like Ethiopian, Jordanian, Royal Air Morocco, whatever, saying, yeah, we too would like our traffic back. The world can't be run by Emirates. Come on, give us something. And they're all buying jets. A lot of jets, 408 alone at the Dubai Air Show last week or this week. What does this mean? We might have an issue with overcapacity with so many people going after the same market. But on the other hand, a lot of these orders are fueled by sovereign wealth funds and people who aren't going to relent. So in
Right.
other words, these jets could come online. It could be good from the standpoint of manufacturing and also, frankly, people who travel getting better deals. In terms of residual values in the long run, there could be, but no signs of it now, a risk of overcapacity in some segments. But frankly, given the production shortfalls, we have a long way to go before we have to worry about that.
Okay. Richard, before we end the interview, I have one last bonus question for you. I recently wrote about the rise of electric aircraft, and you gently informed me offline, without trying to offend my ego. You said that I might have gotten a little too enthusiastic about the rise of electric aircraft. For the sake of transparency and my own intellectual honesty, if not humility, can you explain to our viewers where my hyperbole began and where the real engineering and economic limits of electric aircraft actually are? Take it
I
away.
only know you as long as I've known you, which I think is over 30 years actually. So I think your hyperbole began. I first saw it at a party back in the midnight. No kidding. No, I think there's this tendency to overrate the impact of exciting new technologies. There is, and I'm the only person I believe, maybe me and one other person at my company, not an engineer. All my people are engineers, and the one thing they love is doing energy density calculations. And it's going to take a really long time before we have the alternative propulsion systems needed to do the job of the bigger jets. Having said that, look, you're right to be excited about some of the stuff going on. Matter of fact, I paid a visit to Electra.aero not long ago.
Yeah.
John Langford, organization now run by Mark Allen. It's exciting, and other organizations like Beta, very exciting. But we're talking about a niche impact here: 9 seats here, then 19 seats. And given what my engineering colleagues show me about energy density rates and other factors, it's a long road. I think we're a little more excited about hybrid electric. You have a central
Right.
turbo generator, but even there, that depends upon power, connectivity and energy storage and thermal management and all the other technologies that have really long roads ahead. So I want to believe, but it's going to take a long time.
Richard, that was fascinating, informative, really useful, entertaining, as always. Thanks so much for your valuable time, and I'll see you soon one of these days at lunch. You take
All right.
care.
I hope so. Thank you.
All right, bye-bye.